As I look at gold in the 30-year here, the day after the FOMC, I look at a number of things that are hitting this market at the moment. Tariffs certainly being one of them, and also the China tariffs, and then also, of course, the ongoing tech meltdown. And then, of course, are we looking at the market expecting 3 hikes this year and sort of medium, kind of a simmer, as they say, expectations on inflation? I mean, I think that's pretty much what Powell communicated yesterday. The 30-year is going to be at the center of a lot of that discussion, except for maybe the tech conversation. Tariffs are going to affect the 30-year. Obviously, the FOMC, it's going to affect the 30-year. So one of the things that we know has happened, and this is all about transition, and this is where a lot of traders get into a lot of trouble. And the reason I say that is they start to think about, they minimize the market into 2 trends, up and down, mark up and mark down. Now, Charles Dow, about a century ago now, would have told you that there are 4 psychologies in the markets, and then 1 trend for each psychology. So 4 different market trends: mark up, accumulation, mark down, and distribution. What we have now is a mark down or a downtrend that's transitioned into distribution. And if we apply these, not Charles Dow, but this is Raghee, respect the trend that was. How do we get down here? I still think the dominant lingering psychology is going to be bearish, which means I'm going to favor ceilings, resistance, an overbought test of those levels over looking for a reversal, over looking for a buy, because the only folks looking for a buy are bottom pickers. Bad idea. It's not even, that doesn't even sound interesting. Certainly not ladylike. And then if I'm looking at an overbought short sell, that's an oscillating or choppy market. It's a completely different set of tools. Now I'm talking about using tools like the Ready Aim Fire or the slow stochastic. Do I still believe that to be valid? I do. In fact, our previous entries, and not by much, right? I mean, we got up to 145.16, but I still feel that the path of least resistance is to the downside. I'd rather take that trade with that bearish directional bias that I have off ceilings. So 145 is certainly a decent ceiling. Even 145.20 would be a decent ceiling. I'm not really willing to entertain this market over 145.30. I could keep my narrative, I could keep my bias, but if my strategy is no longer valid, if my clarity is suggesting that the overbought, oversold doesn't make sense, I've got to abandon it. All right. Now, what about gold? This is another choppy market. This has just been chopping around a whole heck of a lot longer. And this is where I think this is an important lesson as it pertains to gold. You know, I think a lot of traders don't feel comfortable buying in this area. And that's because I believe most traders are wired, and most market participants are wired as momentum players. They want to see evidence of the higher highs before they buy. And there's nothing wrong with that. But a lot of what I do, and it's the minority of what happens in the market, I'm an exhaustive trader. I want the market to settle down to a level that I think could find a bid. It doesn't need to catch a bid. I want to be out in front of that. And that's going to be buys like what we see on gold on the daily. Sinks down to 1309 on the April contract, or sinks down to 1314.5 on the June contract. And I want to buy in that area. And again, that's exhaustive buying. That's buying into an oversold market. So both these markets are, I think, being affected by the post-Powell FOMC meeting. Both are being affected likely by the tariff conversation that's happening right now. And gold is plotting an inside day. I don't think it's derailing the overall strength that I anticipate seeing, but I will continue to look for opportunities to buy between 1314 and 1309. And these are 2 of my favorite trades of 2 of my favorite markets right now, apart from some of the currencies. which we'll talk more about in the premium video.